Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today, we're diving into a Form 8K filing from Nixxy, Inc. It's a bit like finding a tangled mess of wires, but trust me, we'll untangle it all and see what's really going on. Let's see what secrets lie behind their announcements, including a potentially huge new deal and a change at the top. First off, what is an 8K filing? Think of it as a company's breaking news report to the Securities and Exchange Commission, or SEC. It's what they file when something important happens that investors should know about right away. This particular report was filed on February 26, 2025, but the earliest event reported happened 2 days prior on February 24. The first big piece of news is about a new agreement with a company called Nixxy SBA, which is an Italian technology and communications provider. It's called the Nixxy Agreement. Nixxy says they've signed a 12-month contract to provide Nixxy with SMS or text messaging services. Nixxy will be using its new cloud-based platform to do this, helping other companies connect and send text messages in bulk. They're talking about potentially handling up to $10 million in revenue per month. The deal renews automatically, but either company can cancel with the right notice. Nixxy also plans to add its AI platform to handle billing and route messages based on quality and price. This could be a game changer and a way for the company to get a boost. Now let's talk about a change in leadership. Miles Jennings has been appointed as Interim Chief Executive Officer or CEO of Nixxy. This means he's taking over the top spot for now. Along with that change comes an updated employment agreement called the Jennings Agreement. Mr. Jennings' salary will increase to $350,000 per year. The agreement lasts for 3 months initially, then goes month to month. Both Mr. Jennings and the company can end the agreement with written notice. Importantly, he'll continue his roles at 2 of Nixxy's subsidiaries, Recruiter.com Recruiting Solutions, LLC, and Atlantic Energy Solutions, Inc. Moving on, Nixxy has also issued some press releases, and these are included in the report. These releases are part of what's called Regulation FD disclosure. That means the company is making sure everyone has access to the same information at the same time. The first press release is titled, Nixxy's Oralink AI announces up to $120 million AI-enabled reciprocal telecommunications services agreement with a global technology provider. This seems to be about the Nixxy deal, highlighting the potential value and the role of AI. The second press release issued the next day is more general, outlining Nixxy's overall growth plans and how they're expanding into new markets. Finally, the third press release is about Nixxy announcing a $10 million share repurchase program. This means the company plans to buy back its own shares from the open market. Now, a quick note, the information in these press releases is being furnished, not filed. This is a legal distinction that means it's not subject to the same liabilities as other parts of the filing unless specifically stated. We can see a list of exhibits including the Nixxy and Jennings agreements, along with the 3 press releases. These exhibits provide the full text of these documents for anyone who wants to dig deeper. Now let's step back and analyze what all of this means for Nixxy. It looks like Nixxy is making a big bet on its technology platform and AI capabilities. The Nixxy agreement is a major opportunity, especially if they can reach that $10 million per month revenue target. This could be a real shot in the arm and could even open the doors for other deals. The leadership change with Mr. Jennings is interesting. Appointing an interim CEO can signal a period of transition or uncertainty, but it could also be a strategic move to bring in someone with a specific skill set for a limited time. The fact that he's keeping his other roles suggests continuity and stability. The share repurchase program is often seen as a sign that a company believes its stock is undervalued. It can boost the stock price and return value to shareholders, but it also means the company is using cash that could be invested in other areas. Overall, Nixxy seems to be pursuing an aggressive growth strategy, leveraging technology and expanding into new markets. But there are also risks. Relying on a single large deal like the Nixxy agreement could be dangerous if something goes wrong. Integrating AI into their platform could be complex and expensive. And a leadership transition always carries some risk. One thing to note, of course, is that a $10 million share repurchase program is quite interesting given that this company is an emerging growth company. This means the company is still not as profitable as others may be, and such a program is definitely eye-catching. In conclusion, Nixxy is a company with potential, but also with significant challenges. The next few months will be crucial to see if they can execute their strategy and deliver on their promises. Keep an eye on their revenue growth, the integration of their AI platform, and the performance of their stock. Thanks for watching. If you found this decoder helpful, give us a like, drop a comment, and subscribe for more insights into the corporate world.